Hello, I'm Rachel and I welcome you to Executive Corner Expert Talks. Today I'm speaking with Indy Singh. Indy is Managing Director and Executive Chairman at wealth services company Fiducian. Here at Kalkheim we bring you industry leaders, successful business owners, market and equity advocates, all under one roof to help you discover the insights of the stock market and help you understand how you can create multiple passive income streams. Good day, good to speak to you again. Indy, how are you?
Good morning, Rachel. How are you going?
I'm very well, thank you. Looks very nice and sunny where you are today.
Well, for some time, I hope.
Let's hope so. So firstly, here at Kalkheim, we'd like to say congratulations on an outstanding performance throughout the half year. And this, of course, all despite COVID-19 disruptions. So what have been the key underpinning factors for such a robust performance?
Thank you, Rachel. Thank you very much. Yes, it has been a very disruptive 12 months. We had Delta that transformed to Omicron, and then the 14-day isolation transformed to a 5-day isolation. And now we got questions being raised whether the lockdown was even worth it. I myself tested positive in December. But the trouble is no one really knows what the new normal will be, so we just battle on. Well, thankfully, in the past, governments threw heaps of money into their economies in the space of 3 to 4 months, probably 10 times more than they put in during the GFC, which took 3 to 4 years. And as a consequence, I think there was a tremendous amount of liquidity in the financial markets, and share markets have delivered phenomenal returns as a result over the last 2 to 3 years. As well, I think property prices have jumped. So for investors, it's been a great time to stay invested. Having a financial planner as we provide, obviously to guide people through this tumultuous period, has been a distinct advantage. Our financial planners have carried out reviews, met clients by video conferencing, and kept them informed and helped them to avoid making rash decisions. As well, I think we communicated quite well, and we also received record inflows from new clients who might have been referred to us through their family or friends. And so our financial planners went the extra mile to hold face-to-face meetings as well in areas where there was no lockdown. Add to that, our diversified funds actually performed exceptionally well and supported our clients. I think year after year, going back even 20 years or more, they have consistently delivered top quartile returns and even been ranked number one in many instances against up to 200 of Australia fund managers and also fund managers from around the world. So that's could have been an envy of any fund manager in the world. So there have been a number of positive factors, Rachel.
Absolutely. And you mentioned there the importance of financial planners. It's so important to keep clients together for business growth. Now, what are the practices you take to ensure the retention of financial planners and their clients?
Good question. I think our culture of the Fiducian family, which we've developed, has stood us in good stead. All people at Fiducian are one big family as far as I'm concerned. We have our differences now and then, but we work together to resolve them and ensure the success of the business and in turn success of the persons working for us and the job security for those people. The other thing we have is that while other groups might consider that they have customers, and we heard a lot about the banks having customers, our philosophy is only to have clients. Now, you could have a look at the Webster Dictionary, and it will tell you that a customer is someone who may drive into a petrol station to buy a soft drink or fill up petrol and go away. A client is someone who has a trusted relationship and who engages professional services. That's what Fiducian does for its clients. So we're very client focused. Our objective is essentially to add to the value that we add to clients' lives and help them achieve their lifestyle and financial goals. So that's been the important part, Rachel.
Now, you declared an interim dividend which is 20% more than the previous corresponding period. How has Fiducian managed to deliver progressively growing, consistent dividends?
Yes, I think our business model is the key, and that seems to have stood the test of time. The last few years have shown that we are a very resilient business, even in difficult times. I think we're also very lucky to have knowledgeable and hardworking, dedicated people at Fiducian. Plus, of course, we have to be very careful with our expenses. After all, many shareholders have invested their money in Fiducian, and we need to respect that. If we can continuously generate a growing income stream for them, it will benefit all, particularly retirees who we deliver fully franked dividends to and who rely on this income. So we respect that requirement from us. The share price, of course, and you would know well, depends on the moods of investors now and then. But we believe it will eventually take care of itself and reflect the true value of the business. So, for example, a person who invested $1,000 in Fiducian around 2012, 2013 would be receiving a fully franked dividend of around $350 today on $1,000 invested. And the share price has risen about 1,126% against the old ordinary's rise of around 165%. So all we can do at our end now, Rachel, is to work hard and capitalize on the solid foundation that we've built for the business, which I think in turn should provide good benefits to shareholders and our clients.
Such good figures there, Indy. Now, we'd love to talk about the acquisition of financial planning business People's Choice Credit Union. Can you talk to me about the synergies and the rationale behind this acquisition?
Oh yeah, we were actually thrilled to be selected as the successful bidder by PCCU after a really tough tender process. PCCU actually is an amazing outfit that cares for its staff and its members and has been very professional in their dealings with us. So what they wanted to do was concentrate on their banking activities and entrusted us to look after their members financial advisors and deliver what the expectations of the clients were. So it's a big task, and we've got to do our best to live up to even PCCU's and their members' expectations. The acquisition, as you asked, brings on 40 new employees, including 17 financial planners. It gives us exposure throughout South Australia and the Northern Territory. That's something we've never had before. And as well, it gives us the opportunity to provide financial advice to up to 400,000 of PCCU's members. It's an amazing opportunity. The current recurring income that we're going to get from this acquisition is around $8.1 million. And the administration, funds under advice, and investment for us will now rise to just under 13 billion after this acquisition. So it's early days yet, but it all looks quite positive, and we feel that with the cooperation of the excellent staff we've actually recruited, I think we're up to the challenge.
Absolutely. It sounds like this acquisition will result in a substantial increase in funds under advice and financial planners for Fiducian. Now, is the company considering other acquisitions in the near term?
Oh yes, you guessed right. Of course, definitely it is a continuous strategy of the board. In fact, there's one business that we're actually doing the number crunching on as we speak. And there's another possibility that we're negotiating. Along with that, another 5 financial planning businesses are actually in various stages of finalizing their arrangements with us. So you can see the business development team is very active, but we're very careful in our selection process. So far, we've always used our own cash, and we have absolutely no debt on our balance sheet, which I think investors like.
Now, Indy, could you talk to me about its innovating fast track and force offerings, not just to stay relevant, but to thrive in competitive times?
Yes, Fast Track is our administration software which administers client portfolios on our two platforms, Superannuation and PIDPS, and Force is our financial planning software. I think we have an advantage of a captive financial planning base, and their representatives sit on committees that actually drive IT development. So, as you know, in the end, the purpose is to make a financial planner's life easier to engage with the client and keep administration costs under control, and as well introduce new features so our clients can be informed better and can be engaged better with their investments. Now, for example, we introduced some transactional capabilities about 2 years ago. And while we don't advertise them, we can see now that a lot of the large platforms are now speaking about introducing those transactional advantages in the media right now. So, yeah, we do spend a lot of time on IT development to keep ahead of the crowd.
Absolutely, and as we mentioned earlier, there has been so much movement in the market over the last 2 to 3 years. We've seen the markets go all topsy-turvy. What is your take on the global economic growth and the rebound across global markets?
Phew, that could take an hour in itself, which I don't think we have. Um, Let me just summarize the house view. Um, we believe that in the short term, there could be volatility as markets digest the inflationary spike that's come through from supply disruptions across the world that came about from COVID as factories and others shut down. We believe that these inflationary pressures should gradually dissipate as the world reopens, a little of interest rate rising takes place, and the pandemic, as has been done in some Scandinavian countries, becomes a simple endemic like the flu. At that time, we feel that the demand for goods that has pushed up that inflation could reduce as people around the world start spending more time in restaurants, hotels, travel, and move away from actually buying goods. So at that point, inflation could reduce, and even though we have full employment, I think wages is something we need to really look at. So, in our view, the share market could move on ahead, maybe not as strongly as the last 2 years, but they should move on. And as we've said before, we remain underweight fixed interest because we believe it's extremely expensive. My advice: speak with a financial advisor who can understand your financial objectives, tailor a portfolio to suit your risk-taking ability or risk profile, and ensure that you are well diversified across asset sectors with your money managed by professional fund managers.
Some great advice there, Mr. Singh. Thank you so much for your time.
You're welcome. Thank you, Rachel.
Thank you. With that, I will sign off for now, but watch this space for more. Till then, stay apprised and invest wise with Kalkine.